Hey everybody, it's Christopher K. Smith. This is my FibLines quarterly update for December 30th of 2017. I do these updates about once per quarter, and this is my fourth quarter 2017 video. So here's your standard disclaimer regarding trading products. Don't trade with money you can't afford to lose. You know the story. Quick agenda for the presentation. We'll give you a brief introduction to the FibLines indicator, review the stock markets, where they went in 2017. Review some of my favorite symbols, and no discussion 2017 will be complete without covering Bitcoin. And we'll talk about my FibLines and range bands indicator and give you a quick wrap up at the end. So first of all, what is FibLines? FibLines is a technical study that can be applied to pretty much any chart stock market that identifies hidden areas of support and resistance. So here's a chart of Facebook, one of my favorites, with the range bands indicator applied to it. You can see it's a trend following indicator. It's done a pretty good job of keeping you on the right side of Facebook. But where's Facebook going to end? What targets do you have? At what points will it find support and resistance? Well, the FibLines indicator helps with that. So let's zoom in on this particular area of chart action right here. And let's pick our Fibonacci retracements tool. It looks like this little percent sign. And we're going to pick a high and a low, say this high right here. I'm going to drag down and select this low over here. And once we do that, we zoom back out, and you can see that the Fibonacci retracements tool draws these lines at the 161%, 261%, and 423% of the initial 100% move that was identified when I created the tool. So this progression is called the Fibonacci sequence. It's a very kind of famous mathematical sequence that appears all over nature. And it turns out that once you identify this area from 0 to 100, these future areas, the 161, the 261, and the 423, are very often areas of support and resistance. So it's kind of difficult to do this for each individual chart, and that's where the FibLines study comes in. Basically select Study, FibLines, and Add. And you'll see that once you do that, we can remove this other drawing. The FibLines indicator draws these areas of support and resistance for you automatically. And it also subdivides each one of the areas. Let's say the area between the 161 and the 261 lines here. You can see that that area itself is further subdivided at Fibonacci intervals. And each one of those regions themselves are subdivided by another area of lines, these three lines. So that's the indicator, is these three different levels of lines. And it's part mathematics and it's part interpretation. So that process of identifying the beginning and end of Elliott wave 1 has to be done individually by hand for each individual chart. So it's a lengthy process, and that is really what the benefit of the FibLines indicator is. Okay, so we've looked. We know what FibLines is. It's part mathematics. It's part interpretation. And for a more detailed introduction, go up to YouTube and search for Introduction to FibLines. You'll see the video I made on that. Introduces the indicator. Okay, so in terms of stock markets, it's been an incredible year in 2017. The Dow was up 25%, SPY up in the 20% range, the QQQ up in the 30% range. But looking back since the election of President Trump back in November of 2016, it's really been an incredible run with the Dow, the Russell 2000 and the Standard & Poor's SPY, S&P 500 up really almost 30%. And the Dow and the QQQ, the NASDAQ 100, really up closer to 40%. So it's been an incredible run. It's been an incredible time to be an investor in the markets. I hope you participated in and grown your wealth. I certainly have. Okay, so let's take a look at some of my favorite symbols through the lens of the FibLines indicator. Back first to Facebook. Facebook, of course, is one of my favorites. I've been with it the whole time since it's been certainly under 100. And I've sold off some of it recently, but just to rebalance the portfolio. But if you look at, I'm going to stick with it long term. And if you drag up here, you can see that the 423% line is up here at $198. So this is the kind of analysis you can do with FibLines you can't do with other studies. So I'm sticking with Facebook with a target of $198.29. Okay, next up we have Alibaba. This is one of my favorite sort of trading stocks for options. It's been called the Amazon of China, and I stick with it strictly as a trading vehicle versus an investment because of the accounting standards between U.S. and China are different. I'd rather invest in Amazon versus Alibaba. But you see we've had an incredible run here. We're kind of hovering around the 261 line. And we had an expanding range, and now we seem to have a contracting range, which corresponds to the TTM squeeze, going into a squeeze on the red bar down here. And this TTM squeeze is usually when you have periods of consolidation like you had over here. When the stock breaks out of that period of consolidation, it usually continues in the same direction that it was. So you see we're going into period of consolidation on BABA and hovering right here around the 261 line. That's really interesting thing about these FibLines. Sometimes the areas of resistance, in other words, stocks will bounce or deflect off the line. Other times the areas of support will stocks will actually kind of consolidate around that line. I think that's what we're seeing here with Alibaba. And okay, so that's BABA. General Electric. Now, the stock's been in a world of hurt recently. I think it's the worst performing Dow component of 2017. And the FibLines also work on the way down as well as on the way up. So rather than picking a top and a bottom and projecting up, you pick a top and a bottom and project down. So we can see here that General Electric has a 423% line down in the area of $14.04. So that's my target for General Electric. So I wouldn't necessarily short it, but I would play it by selling call spreads above and possibly buying a put spread below. So General Electric is not done. I expect a low of $14.04 based on the FibLines indicator. Okay, United Health, I decided to throw up here just because it's kind of a sweet example of how the FibLines, how sometimes some markets really obey the FibLines very well. So here's a low and a high that was identified back in 2016, 2 of 2016 to about 8 of 2016 was your Elliott Wave 1. And look how well it deflected off here off of the 261 line. Really just a beautiful 3-bar deflection in some of these cases. Sold down, had a beautiful 3-bar deflection off this orange line. Shot up, finally broke through this area of resistance and moved up. And you can see that FibLines works kind of sometimes on multiple time frames. You can zoom into different time frames and notice how it obeys those lines. In this case, it seems to be kind of hugging the orange line at the hourly time frame. Okay, next up, ADP, automatic data processing. This one was in play through much of 2017 through Bill Ackman and his hedge fund. Eventually got turned back. Got rejected by the board. His board seat was rejected. But we had an old high, an old Fibonacci 423% line right about here around the 105 level. Kind of bounced off of that for a while. Really just shot up through that once Ackman announced his interest in the stock. And since then it came down, found some support right around the old 423 line, and has since moved sideways higher. My target for automatic data is $132.06. A great company, great stock. And next up would be crude oil. Crude oil's energy in general is recovering. We've gone from an oversupply situation to really almost a balance between supply and demand, but prices are still fairly low considering how they've been. At least at the retail level, gasoline's right here about $2.50, which is a good level for transportation industry. I was watching crude oil back here in 2016 when we had this low that turned out to be the 423% line. So we've had a pretty good rally, and I think we're close to a 2-year level high in crude, and I believe it's the 261 line. Yeah, 261 line is right here at about $60.98. So I expect oil to consolidate around those levels, which was a period of consolidation back here in the past as well. How could I leave out PayPal? PayPal is really my best stock of 2018. Let's go back and take a look at that. PayPal is really one of my best, along with Facebook, one of my biggest winners of 2017. And if you watched my previous video, you'll recall that the previous chart looked like this, and I had an old 423% line about $63. And literally, I pointed this out in my I think it was 2 updates back. I was watching PayPal. I saw it broke through the 261 line here at about $50, rallied up, came back, did an almost perfect 3-bar reversal off the 261 line. I saw that as an opportunity to buy, so I doubled my position here in PayPal right in the low $52 range with a target of 63. Rode it all the way up. It exceeded, briefly deflected off the 261 and moved up way higher than I expected it to. So PayPal was a big winner for 2017, and you ask yourself, why do you do this, Chris? Is it really all worth it? And in this case, it certainly was. I had made some good money in PayPal, both in my cash and my retirement accounts. So I'm sticking with PayPal for now. Notice how it got up. This is my new interpretation. PayPal got up, exceeded my new 4.23% line at $76. Came back, had a nice 3-bar deflection off of this orange line down here, and is now going into a TTM squeeze. So this is a very common scenario. And notice by the way, after this 3-bar deflection off the orange line, I came back up, deflected off the 4.23% line, almost to the penny, really. And now is kind of in a sideways pattern between this gray and the red line. So zooming back again, you'll notice that PayPal is going into a squeeze in the TTM squeeze indicator. And that just means I believe it's the Bollinger Bands are inside the Keltner channels. It's a volatility-based indicator. And again, notice when stocks break out of the squeeze period, they typically continue in the direction of which that they broke. So just taking a little bit of a pause on PayPal right now. I'm going to stick with this interpretation for the time being. Okay, the dollar DXY has really been in quite a retreat here, which is interesting. I guess it makes the U.S. exports more competitive, and every central bank in the world is really fighting to deflate its currency. So that's in some ways good for the U.S. economy. And no discussion of 2017 would be complete without Bitcoin. So let's take a look at GBTC. This is the Grayscale Bitcoin Investment Trust. Now, Bitcoin's really had an incredible run this year, and in coming up with my FibLines interpretation on it, I looked back here in early 2017, and I found the low about $104, I believe it was, a share. And then the high set recently back here was 3,500. So to put that in perspective, if you put $10,000 into Bitcoin into GBTC in early 2017, it would have at its peak grown to $350,000. So that's $10,000 to $350,000 in less than 1 year. That's an incredible move. And I missed it, unfortunately, because I don't trade based on price action alone. But it's an interesting study. And of course, now everyone is clamoring to get involved in Bitcoin one way or the other. GBTC is one way to do it. However, keep in mind that it trades at a healthy premium to underlying Bitcoin Cash. And at this peak up here at 3,500, I believe Bitcoin itself was at about 18,000. So it was about a 50% premium to the actual value of Bitcoin. So, but it is relatively easy. I mean, you can trade it like a regular stock symbol. So that much is good about it. But there's now futures on Bitcoin, both the CME and the CBOE, and there's several companies listing to trade Bitcoin ETFs in 2018. So in terms of my FibLines interpretation, I found a pretty natural Elliott wave 1 down here between 100 and about $500. That's quite a move for a wave 1. And since there, kind of accelerated up. It shot right through this area, shot through my 4.23% projection, and really ran up. Really spent less than 10 days above that, but really, I guess, almost doubled from that point. Then came back, did a perfect 3-bar reversal off of the 261 line, and right here it's consolidating right about the 4.23% line. So what does that mean for Bitcoin? I think the really spectacular moves are done for the time being. There's as more players come in, I think that'll calm the price down somewhat. I don't think it'll be quite as volatile as it was, just because there's more arbitrage opportunities between the Bitcoin Cash and some of these futures and derivative products. And that'll help, I think, to dampen the volatility a little bit as more players get involved, because you can't really have the moves can't be that insane once you have futures to hedge against a cash position. The futures themselves have, I think, a 15% daily limit, so that should tend to calm some of the volatility in Bitcoin. But even so, it's been an incredible run. Here's my FibLines interpretation. I expect to see some consolidation, at least in GBTC, at about the 1900 range here. In terms of other ways to play Bitcoin, there's one of my other favorite trading stocks is NVIDIA, NVDA. They sell some of the chips that are involved in AI, artificial intelligence, which is of course a big market trend. And they also sell some of the hardware for the Bitcoin mining itself. Micron's another one of them, MU. Some other ways to get involved in Bitcoin without actually investing in it itself. But you look at the stock market itself and you say, is the stock market at a high? Usually when you get to periods of euphoria where everybody's involved, we really don't see that with the stock market in general, but we almost do definitely see it with Bitcoin. A couple of stocks in the last week or so have just changed their name to have blockchain in it or anything to do with that. One of the companies called Riot Blockchain. These stocks have been rallying. Anything to do really with Bitcoin has been rallying insanely. So Bitcoin has some of the features of a mania, of a bubble, but not so much true of the regular stock market. So be careful with Bitcoin, of course, but it's certainly an asset class now that we have to watch and we have to pay attention to going forward. Okay, so just a quick in terms of some of the products that I have. There's two. There's range bands and there's FibLines, and you can get the FibLines indicator up at my FibTools Sell store, which is fibtools.sells.com. And you can, up there you can get the range bands indicator, which is free. That's a trend following indicator for Thinkorswim. You can also get a free version of the FibLines indicator that has FibLines for QQQ, DIA, IWM, SPY, and the futures equivalents. And the full version of the FibLines indicator costs $99, and that covers about 200 different symbols that I update that quarterly, once per quarter. And this is again my quarterly update for 2017. So click on that. We take credit cards. You'll get the FibLines indicator for Thinkorswim. It covers all 200 symbols, plus 4 quarterly updates for $99. And my competition sells this indicator for $1,000 plus $50 a month to maintain it. I'll give it to you for a whole year for $99. So I think that's very reasonable. So that is my update. One more thing. My range bands indicator is also up on the TradeStation Trading App Store. Station. Should have had this up ahead of time. You can see I'm one of the top. Oh, I should have had this Trading App Store. Actually, it's just Google. Let's just pause this for 1 second. Yeah, so on the TradeStation Trading App Store, you can see my range bands indicator is up here in the most popular indicators, and that's offered as both a strategy, an indicator, a paint bar, and that's available for free in the TradeStation Trading App Store for users of TradeStation. So one other thing I'd like to mention is I've had some good experience in 2017 with the Tastyworks platform, and this is what it looks like. It's mostly for trading options, and it has the benefit over Thinkorswim, for example, for price. So if you were to trade an iron condor, a 4-lot iron condor, you could do that on Tastyworks for $4 commission with no closing trades, no commissions to close the trade. So to do that same trade on Thinkorswim would be $1.50 per contract, at least the deal that I have with them. So it'd be $6 to open the trade, $6 to close the trade, $12 round trip. You can do that same trade on Tastyworks for $4. So it's a great platform. It's quick, it's easy. And the kind of trade I would do, for example, I'd look at NVIDIA, I'd look at to sell the, let's look at Tesla's a good one. I'd look to sell next Friday's iron condor, and it gives you nice and neat levels. This gray area shows the expected move. So you can see I collect 80 cents here for a $2.50 spread. It's a little low. I'd go for closer to 90 or 100, but if it doesn't work out, you close it out for a small loss or scratch. If it does work out, you get to keep the entire premium collected. And because the commissions are so low, you could do these trades with great frequency without the commissions eating you up. So I had a good year doing that in 2017, and I'm going to keep doing that in 2018. So that's it. In the end, it's been a great year for me, and I hope it has been for you also. But keep in mind that not all that counts can be counted. Not all that can be counted counts. This was a quote from Albert Einstein on the wall of his office at Princeton. I don't think he originated it, but be grateful for what you have. Don't compare yourself necessarily to others. Be true to yourself and enjoy what you're doing, and all will work out well. So that's it. Thanks for watching. Have a great 2018. Have a happy and healthy new year, and good trading.